morning, everyone. It's Tuesday, August 1st, 2023. Market pre-open. Right now, I'm looking at the stocks trade that we had yesterday that I closed. Probably go back and talk about this later. First, I would like to go look at well, it's the beginning of the month, so it's good to see what's possible upcoming trades. So let's go look at a little of the news for this morning. See, so you have Uber's shares rise on Rose guidance, and so have earnings. Basically, Uber have earnings last night. Up a little. JetBlue forecast. Pfizer beats on earnings. So we have a few earnings came out. Somebody raised S&P 500 target. Merck beat revenues. Planet layoff 10% workforce. Oil major BP posts 70% drop in second quarter profit. Okay, raised dividend. Okay, so Uber's news only carry up 3%, while Pfizer's news they're much, even it beats an earning. I guess they expected that, but revenue missed. So I mean, it's post-COVID already, so COVID product sales plummet. That's pretty normal. Market mover yesterday or this morning. Herman Gobold, Hasbro, J&J. Not really that much going on. JP Morgan moved 1 million. The Epstein case. Meta stock wrap up in its 9th straight month. These guys been going up on back of AI. Yeah, overall this morning, nothing really major that affects the market pre-open. So market's pretty flat, right? Down 0.1% on Dow futures. S&P 500 down 0.28%. Nasdaq future down 0.51%. Everything is just flat in this case. So let's go to our individual charts this morning. So VIX is at 14. Still at this very depressed level, below 16. So as an option seller, would not have a lot of premiums when in a low volatility environment. Option pricing is about the underlying, the probability of its moving, and its volatility, and also the time decay, time to expiration of the contract. These are some major factors of the option pricing models. So when VIX is being very depressed at a low level here, as we see, you don't expect a lot of premiums when you sell it. On the other hand, when you buy, you can buy these most options at cheaper price, unless the underlying is very volatile. So that's individual case. But overall, the environment is pretty compressed on the premium, on the volatility level. Dow Jones. So you have this nice, still staying up above this red 200 moving day average. So what's the significance about 200 moving day average? It represents close to 1 year of trading days. It is a round number. So a lot of technical traders or traders will look at using this, the red line, like I color it red, that's all, but it's a 200 moving day average. You take the previous 200 day moving days, 200 days of data, every day add the latest one and drop out the oldest one, and you use that 200 data point, 200 days average to plot. So this is where the last 200 days is at this plot on the average of 200 days. And every day you add one and drop one. Add the most recent day or most recent bar and drop the oldest bar. So it's moving every day, and you have this nice red line here, and that represents, if it's above the red line, it's kind of the bulls are in charge. There's more buyers than seller. If it's below this red line, that's more seller than buyers. That's all it means. Is this significant? You have to look at it in the way that you really combine other indicators together. And right now, it's so far away from this 200 moving day. It's definitely the bulls are in charge. There's more buyers than sellers. Right? And as you can see right here, it bounced off. Right, penetrate, came back. So there's more buyers than sellers. Meanwhile, over here, as it dropped, it went through. So temporary at this level, at this pocket, you have more sellers than buyers. But eventually, you see all these tails. I mean, the sellers are pushing it down, and the buyers comes in and bought it back up. That's why you have these tails, and you see these, the doji star across. This is called doji star, and in the tail there's like the hammer, right? So you have these tail. It tell you that a lot of, although the sellers are selling and pressing the instrument down, what you really have is the buyers comes back and bought it at these levels. Say, oh, it's cheap, let's buy on these levels, and then eventually push it back up. Right? So right here, you see this level that the buyers are in charge. It bounced right off it. Right? Penetrate, came off. Penetrate, came back. Penetrate, came back. While you have two false hammer, you have false hammer candlestick here or over here, and then it start making new high, break the new high. Eventually, it start recovering. Right, and then it bounced off again, and now this time the white line is a 21 days moving average. So right here it bounced off the 21 days. Over here, penetrating, came back above it, and now eventually the Dow Jones over here is a breakup. Right, so right here is the previous peak on this 2 bar. You can see very clearly when the new price action goes beyond this peak is a breakout. So it broke up, right, and then it just took off. Right now, this yellow line, that one is actually a 7-day moving average. What's telling me that that's momentum is riding above the 7-day moving average. Once it took off, right, it continued above until this bar. Although it penetrates and close right a little below it, but the next day it gaps up again. Now it's making a run again. So it's have momentum right now. You can see this yellow line, that's a 7-day moving average. And then my moving average conversion divergence of the MACD indicator is telling me it's pulling up. Right? Once it crosses over the fast line, cross over the slow line. The fast line is the blue line here, and the slow line is the orange line. Right? My blue line, this one is a 9-day. My orange line is 21-day moving average. So my 9 days moving average is picking up momentum as it takes off, and it crosses over above the orange line, which is the 21-day moving average. Now, this moving average is an exponential moving average. That means it's weighted. What does that mean? Is that the most recent bar have more weight than the oldest bar. That's what exponential moving average is. Right? So it's a different way of calculating moving average. And I just picked these two. Is that much significance to it? I really doubt it. You can use your regular 7/21. I just want to say, oh, let's take 8 days, but I want to use an exponential. Weighted the most recent one more important. So that's that. So over here, crossover, but now it's narrowing. You see how it widens out between the blue and the orange. And eventually, it comes back down, and then now it's almost going to touch each other again. So the momentum of this up move is dying. It's compressing. That's all it's telling me. That's what it means. I mean, is it going to go up or down? I have no clue. Is it going to widen out or it's going to cross back down? I have no clue. I wait for confirmation. On technical analysis, I don't make prediction. You can make, there's a higher probability of things going a certain way, but until the indicators, until the candlestick tells me otherwise, it's confirmation, that's just a probability of things that might happen, might not happen. So I'll wait. I wait for confirmations. I don't use this to make projection prediction. Fundamental analysis, yes, to make projections. But technicals, I wait for confirmation. So on the back of fundamentals projection, I use technical overlay to make confirmations and then take a trade. And that been working out all these years. As soon as I do it, just start trying to make predictions, things just falls apart. Right? So I'm trying to outsmart myself. Nobody can outsmart the market in that sense. So I learned my lessons over all these years and just wait for confirmation on the technicals. But I can make projections on fundamentals. That's a different story. Now let's go to our spiders, S&P 500 tradable, right? Now, this one, right away, I want to point out this. I want to point out that right here, on this peak, and then on this peak, the most recent peak is lower than the other peak. So you can connect these two peaks of a line, and you can notice it's a downward, right? This yellow line, you see, it's slightly downward. Meanwhile, if you look at the price action, the candlestick bar, right, on this peak, it made new high, and it came off. And then on this peak, right here, okay, the market make new high, but my MACD does not make new high on the peak, right? Market make new high, right here, but the MACD is slower than the previous peak. That is called a MACD divergence. This make new high, this went the other way around. It tells me that this momentum on this up move is dying again. This is called moving average convergence divergence, right here. And this is the divergence, the indicator divergence between the market actions and the indicator. This introduced a third type of trade setup, which is called reversal. But the reversal trade is the least probability of it working out in my book. Some people are expert in that, not in my book. For me, I'm not the expert in that. I can still make money. I would say it's a 60%, 55% probability of winning. And when I use option overlay, I increase the probability a lot more. However, that's not my bread and butter. Matter of fact, I get just 50, 55%, maybe 60% probability of winning. So on that, I usually doesn't take these reversal trade. Just not a cup of tea, but I want to introduce that as a third type of play. So the first type of play is a trend following. I buy on the pullback. Wow. The second type of trade is a breakout, which I just demonstrated last trade live on the SOXX SOX. How do I do a breakout trade? Third type of trade is a reversal. And reversal, I need to look for this MACD divergence. So moving average convergence divergence indicator right now is a divergence on these two peaks. Market make new high while my MACD does not. When you connect the latest two peaks together, previous two peaks, the high levels, and I will see, oh, this is momentum dying down while the market made a new high. So what is the entry signal? I have to wait for tails, confirmation of sellers coming in, confirmation of people profit taking. I want to see market new high and a seller comes in. I want a volume spike. I want to see a trading volume spike. Right? That sellers are coming in, people are taking profits. Then maybe, okay, that I might take a reversal trade. But that usually, it is a trade, but it's not my bread and butter in that sense. But I want to point out the third type of trade of a market reversal trade. Matter of fact, it's better to let it reverse and then on a pullback, look for a false hammer and continuation of a reversal. That is a higher probability trade than on the first reversal signal. Of course, you get more money when you do the first reversal signals, but it's a lot more risky. So risk and reward in trading is always proportional. There's no free lunch in that sense. Now let's go to the QQQs. Same thing. You see right away, this peak, the previous market peak, is lower than this peak as the market make new highs. So again, you have a very clear of a divergence on the MACD indicator, or the moving average convergence divergence indicator. Again, you have a divergence. Market make new high from this peak, right here, that's peak, where the market peaks out, made new high here, and then it pulls back. And then until eventually, right here, it broke out, and then make new peak, right? And you will see right here, the latest peak, the last peak is over here on the MACD. However, this level is much lower than the last peak. So this market make new high, but your MACD indicator has made lower low on the peak, and that is a divergence. So what I'm seeing is a possible market is going to do a reversal or retracement or so. If it's bounce off here on this resistance level, then that will tell me, yes, probability wise, I might not want to take a long trade now. I want to see the market, see what it does first to go long again. But that's not necessarily I want to short the market. I mean, I'm more neutral now on this. That market is telling me, okay, momentum's dying down. It's more on a neutral mode than the bulls in charge or the bears in charge. It might less chances are it's going sideways. Chances are I want to do some sideways strategy instead of just thinking it's going to go long again. But again, I have to look at the market action, price action, and will give me a confirmation what does the market want to do. Right now, it's telling me, okay, market might want to take a breather, might want to come in a little, might want to pull back a little. And it's August month too. Right? August month, everybody's on vacation. Myself, I'm taking a step back this month. It's going to be slow. I'm going to make less posting this month in that sense, and I expect a slower market. And the volatility, when it spikes, it's going to be more volatility because although that's less people, but when news comes in that move the market, it's going to be more significant in that sense because people is away. And it's easier actually to really move the market when there are less participants, if you think of it that way. Instead of 10 people fighting each other, you have 3 people fighting each other. So 2 against 1 is much easier than 5 versus 5 or 6 versus 4 or 7 versus 3 in that sense. Okay, next. IWM, Russell 2000 small cap, make new high. It sucks. We closed out the trade yesterday. Banking index, okay. So there's nothing much significant. It's rounding off, but it's staying above the 7-day momentum on KRE. So yeah, financials went through. It recovers, and then right now, the momentum dies off and it went below the yellow, which is a 7-day moving average line. Right now it's going sideways in that sense, right? It's above, it's a little below. Had it really retraced there? No, you got a next level is actually going for the 21-day moving average, right, which is this breakout peak around here as you extend it. Yeah, and the next level is over here, the breakout, the gapping, right here, right. So there's many different levels as it falls off, and we'll see how it goes. Now this guy, dollar index, okay, dollar's recovering. That's all. Not tradable. I don't see a trend. So oh look, nice little tail, false hammer. Alright, so that was a buy yesterday on this guy. It bounced off the 200-day average, but it's an energy sector fund. So if you pull back more, although it's a mini uptrend, it's pretty much still inside this whole sideways. This whole area is just moving sideways. Now right here, that's resistance. So no, that's no trade. If it gaps up, you even buy here. Your next level where you're gonna get out is right here, the yellow line. That's where the previous peak, right? So yeah, better off as it consolidates. This guy goes sideways. Eventually, it might want to make a move and goes a breakout move over this level. So I'm gonna extend this resistance line and see what it's going to do. But yeah, so it's rounding off. If you pull back and they try to go sideways on this guy, then it picks up. It builds up all this momentum. Eventually, it might picks up and breaks up on the upside. Otherwise, it would just bounce off this level and then retrace back, and it just sideways overall again. Again, with confirmation, the market, the technicals will tell you what it want to do, who's in charge. Oil, again, same thing. Energy, oil, gold. Gold is just hovering at this level right now. It's touching the 21 moving day average is touching the 50-day moving average, so it's really going sideways on this guy now. Dollar yen, okay. Nothing's going on. Bitcoin, no, nothing much going on. I'm looking for a trend first. I want to see something that is of one directional. Right. That will give me a better play. 20-year treasury, nothing. Gold, nothing. Silver, nothing. Chinese internet, wow, gap through, huh? Okay, so it stopped at this peak. Yeah. Wow, triple top, 1, 2, and 3, and that's where it kind of like stop at yesterday. So you have this triple top level. So let's draw this line, and move this here, and you have I see a triple top. After it broke at this level, now it's on top of between these two yellow line in this level. That's all it's telling me. Do I have a play? Nope, I don't have a play because now I wait for a pullback and see what happens. I can do a regression channel, but it's pretty clear I don't even need to bother with that right now. Shanghai large cap index. Same thing, they kind of all move together, the Chinese stock. Baba, right, on this significant level again. Okay. Right around here. So that's the resistance area right here. You see this peak, and then you might try to peek around here. This is the area that's going to have resistance on Alibaba. That's what it's telling me. I don't have a play on this. Tencent? Nope. Okay, let's just go JD. Yeah, they're all stopping around here for now. Apple. Wow, look at these guys just trending up. There's no pullback yet. Now I'm seeing a little congestion on this area, so it's going sideways maybe. I would like to see a sideways action right now for this month. Right? The daily boss going sideways. And even a little retracement, then we may have some better play. If it's just go one way like this, it's hard to play a stock like that in actuality. I have to wait for a pullback, or I have to wait for profit taking or something on the other side first to determine what's going to happen. What's the probability of something happening? If it's just going up like this, making new high, it's difficult. Google gap on earnings, right here, earning day, and it just gap up. Yeah, so it's hard to make earnings prediction in that sense. So you have to expect volatility. Some people like to trade earnings and the volatility compression on the day after, but you just never know, and that's more of a gamble to me in that sense. So I don't play the earning plays in the actuality. You just don't know what the guidance is going to say. You can calculate the possibility of all the earnings numbers, but you have no idea what the company's guidance, the forward-looking, is going to announce, and that will affect these situations where you have a gap up or gap down. It's more on the guidance of the forward-looking statements that company earnings release, right? So in that sense, that's what makes it difficult. Yeah, that's what makes it more of a gamble when you play earnings trade in that sense. At least to me. Meta, okay, pulls back and then it pops back up again. Yeah. I mean, it's been going up like this whole year. Tesla finally turned around after the announcement of a trade here. But I took a $9 loss. Yes, yeah. I mean, it's a flat because once it announced that Elon Musk is stepping down as the CEO, I actually have some short options on the short spread, and I'm like, okay, it might recover. So I closed the trade on just like a flat down a few buck on each contract, and then it started taking off. And it did it as expected. When the CEO say, okay, I'm going to stop doing stupid thing now. Right? Focus back on what my competency is. Right? That I'm going to step down as the CEO, and I'm like, okay, the short is over in that sense. He's going to chances are he might refocus on and bring the stock back, and it did in that sense. So that's why I say, okay, take out my short puts on these guys. Oh, I have a book and wing butterfly in actuality. Alright. It's a combination of option strategy. Yeah, BPW. That's a long call book and wing butterfly on breakdown. Yeah. So it's actually a short position on that sense, and if it goes up, it will go against me. So I close it after a few days in announced, and then it pulls back down a little. That's my chance to close it at pretty much flat level, a field book, right? And then it took off, and that was a good call. You have to make decisions when to close out when things is not when the situation change. Right? In that sense, and like the thesis, that trade thesis is no longer intact. So find a point that you take minimal loss and close it, and that's exactly what I did, and then it took off. Some trader might take the other side, but there's no indicator that it's going to take off at that point. But right here, when I closed the trade, well, with the trade, that worked out for a while, and then it started doing this, and then when Elon Musk say he's stepping down as CEO of Twitter, we focus back on what his core competency is, and I said the trade is over. I was betting he's continued to make stupid things, doing stupid things. That's all. In that sense, and Tesla was going sideways. I make this huge jump and then recover a little, and then it gapped down again. And I was looking for this possibility and it gapped down. It retraced back to the support level, and that's when I opened the trade. And then it was going again, and then somehow it started recover and going sideways, and that breakdown did not continue. And then news comes out, and I was like, okay, when the trade thesis change, the environment change, the trade is over. So you can get out as soon as you can take a small losses or you can flat. To me, this is like a flat. That's $9 on each contract I lost. So yeah, a small percentage, and then it took off. If I held on to trade and hope, I will have took a much bigger loss on this trade. So again, that's the dangers about being an option seller. On the downside, you will lose more. So for every dollar I stand to gain, typically I will lose $4 if it goes against me. But my probability of winning is much higher. Not only that, even if it goes against me, I can take a very small losses instead of harsh losses until reach my point of no return in that sense. So you have to be more quick on the feet when the trading thesis, the environment change, find a place and take a small losses instead. That's how it goes. And that's making good decisions on trading. Trading is about not only just about getting good setups, but once you open a trade, you have to make good decisions on when to close the trade, when to take profit, when to just this trade thesis is no longer intact and I have to close this and take the small losses. And that was the right move. So what does that tell me? I make a good trade because I make the right decisions. I contain my losses. I control my losses. You control all losses. You control your great gains. You have consistent setup. So over time, you have more gains, more profit than your losses, and that's how you make money on the long term. You don't make money on every trade. I don't make money on every trade. Nobody make money on every trade. You have more, but you have more winner or bigger winners than the losers. Then over time, overall, but at the end of the month, at the end of the year, you make money. Make good trades, make good trade decisions. That's how it works. Okay, let's move on. Amazon. Okay. Yeah. So Amazon, I have this trade a couple months ago. It worked out right now. It's just going sideways. If this gives me a false hammer, that will be a perfect trade. Right? A long tail. That means people are taking profit, sellers coming in, and then buyers say, "Oh, that's a good level to buy. Let's push it." They push it back up. Then I have to open a trade here. But it did not give me a false hammer. And again, this momentum is dying down. I have a MACD divergence. So in that sense, that wasn't a trade for me. Some trader would have talking about I would take the higher probability trade. I don't need to have a trade every month. I just need to have a good trades. In that sense, because good trades will bring me profit. So I rather have good trades than have to force myself to trade. And the beauty of trading for yourself is that I don't report to anybody anymore. I don't manage money anymore. So I don't have to be under client's eye, under client's microscope that, oh, why don't I make money this month? Why don't I have a trade this month, right? Because I only work for myself. I trade when I see everything's aligned, when probability is highest on my side. Netflix, let's see, okay. Wow, Doji Star, right? Peaks out. Uses this is called Doji Star, right? Like a little cross here, and then you have the reversal. Went right back below, right? So there's a breakout, but on the next one, if I took this trade, then wow, this is going to be painful. So that will not. Now, what will prevent me from taking this breakout trade? MACD. You see this, the moving average convergence divergence indicator, where I have a clear divergence in momentum right here. Right, connect the last two peak. Market make new high, but indicator does not make that the most recent peak, not even on the level of that. That means momentum is dying. I won't take this trade. I won't take this breakout trade. Okay. So that will be a good way to prevent me from taking a false breakout. which it did in the false breakout. When the momentum comes off, if it's make similar level, if the peak is around here, yes, that might be a possibility, good trade. If it's make even new high, wow, momentum is intact, yes, take the trade on the breakout. Right here, a divergence, that is a reversal indicator. That is when the reversal guys comes in, and oh, there's a doji breakout and a doji star, and then a MACD divergence. That's a reversal right here. Very clear is a reversal signal on this right here, right, with the MACD right here. You have two things aligned. You have the doji star and you have the MACD. So you have two technicals telling you, oh, don't take the breakout trade, don't go long on this guy. Really important to understand when to do the breakout. What are the indicators that will help you to prevent you from making a trade that will end up like this, a false breakout. Right? This is I would say this is the lesson of the day, since I was talking about the MACD today. Right? This is just a reversal signals. You have the doji star candlestick bar and moving average conversion divergence in divergence. This too are very clear that the underlying is going to reverse. So this is significant to learn, to understand that, hey, do not take the trade on the upside. Do not do a breakout trade on this guy, because you have a breakout and then first you have a doji star indecision. Right. Had I took this trade, right, then I failed to look at this. I failed to look at my MACD indicator. This is why I always have a MACD on. I want to see the momentum of the trend falling through or not. In this case, the momentum does not fall through. My most recent peak is lower than the previous peak. Right? So this peak, as the market make new high, but my momentum is actually lower than this previous peak. That tells me very clear this breakout is going to be weak, and it did. It's a false breakout. Next day it just get down, get right through, and came off until it bounced off what? It doesn't bounce off the 7-day. It bounced off the blue line, which is a 50-day moving average, and the previous low right here. So it's very clear that as you move up here, this is your chance to get out. If you took a breakout trade, this is around here. This is where this breakout took place, and around the 7-day moving average. This is where it stopped. This area, your chance to take a small losses on this trade if you took the breakout trade on this. It's a false breakout, very clear. And then now we retrace. This is your chance to get out of this trade. The thesis, it was a wrong trade if you took a breakout, and I didn't take a breakout trade because, again, the MACD was telling me momentum died, it's down, so the breakout was not there. Right. If it does a doji star, a false hammer, I might actually go long in that sense, but it will be a weak, kind of a weak continuation of an uptrend on this overall uptrend. Right. So right now, this guy have no trade, but I want to point out a reversal signal, the third type of play, a reversal play. And the first thing is looking for candlestick action, a doji star or upside down hammer, and then also a moving average divergence as the peak is not making a new high while the market or the instrument make new high in that sense. So that's a good reversal play. Talk to people who take a reversal play very clear on this in the sense. And if there's a volume spike, hey, yeah, the third thing, let me add the third thing right here. Third is volume spike. That means there's a lot pickup in trading volume on this guy on the day. There's a lot of buy and sellers, but so much seller that depress it back down. So volume spike. But on the doji star, typically you don't have a volume spike. That's the thing. But these are the three major technicals I look for reversal signals, and that would tell me to get out a long-term trend. And actually, if I've been long, that's telling me to okay, I need to get out on the spot. If I don't get out this spot, yeah, the next day it will do this, or even get down, or stay around here. Then I have a chance. Otherwise, yeah. So again, since I'm an end of day trader, while I wait for this spot to compete, I will get out here, and then make low keep going for the whole week actually, right? So in that sense, this a reversal signal, profit taking signals. If you have been long on this long trend. Microsoft came off. Okay, I don't see any buys coming in yet, so nothing much significant. Oracle, yeah, nothing much. Yeah, it's just fighting, going sideways, dies off now. Nvidia, star of the year. Wow, hugging this touch and then bounce off of this 7-day moving average line. The white 7-day moving average line. It is staying up here. So for people who have been holding short and a gap like this is a signal bar to really get out of your short. This will be painful. There's no reason to actually short because we have been on a long-term uptrend. I was long over here at a gap. I held on to the option to expiration because I pocket the whole 100% of premium on this trade. It went one direction after the earning day. It just popped up and then now it went even higher. Right. Do not try to play reversal on a momentum direction because you're gonna end up with this. You keep making new high, and you will keep losing money. This is why my bread and butter trade is follow the trend. In my early trading days, the experienced guys keep reinforcing and telling me, just follow the trend. That's how you make money. Right? But of course, as a young guy, you get creative, you try all of that stuff. And in the end, now I become one of these old experienced guy after close to 3 decades now, like 2.5 decades of investing, trading. And it turns out, yeah, now I tell other people too the same thing, just like the old guys telling the new young guys in trading, follow the trend, and that's how you make money. And it's so true. There's nothing new under the sky in trading. All that can be done, all that need to be discovered kind of have been discovered. And just listen to the experienced people, and they will all tell you follow the trend. That's how you make money. And right now, I tell everybody follow the trend. That's how I make money, and that's how you can make money. Okay, let's move on. Qualcomm, Intel, double top, right? This peak. Wow, look at this hammer, huge. But then it pulls back down on the next day. Yeah, so not significant. Again, you have this moving average divergence, right? It doesn't make new peak, but it doesn't make new high, but it's when stop at previous peak. But this momentum is not there. It tells me that the momentum has compressed and dies off. So yeah, so that value is insignificant. Everything is kind of like that right now. So on the semis, it's the momentum is coming off overall, as you see across a lot of semiconductor stock, and it's telling me that the market is in a sideways or a little profit taking maybe possible retracement area environment right now on the semiconductors. Okay, IBM make new high though. Now you see now this guy is different. Finally, IBM is catching up. Right now, it make this is not it's make coincidence make new high, although and it stay up at this level. All right, so this guy is very different now. This guy is telling me, hey, look at the MD, and now it actually have momentum on the upside of this guy. So now this one would be a bull candidate in that sense because of this MACD, and it's making new high. It's telling me the momentum is intact and it pulls itself right off. Right, this breakout, the previous peak is here. It broke right through and it just continued. Right, it broke. Right, this breakout trade, and then this is the long signal. Take the trade, and then you have 3 days of up because of this indicator will tell you the momentum is intact. That is the trade of last week. This was the trade of last week. The IBM it is above this 200 moving. See, at one point it did a flag pull. Right? It's a long-term downtrend IBM. Right? While all the other semiconductor was up, all the semi guy, this guy was down. It was weak. It was up, and then when it went below the red line, 200 moving day average. However, it switched. It broke through, and then came back, and then it's fighting on this 200 moving day average. Finally, now it's making a significant uptrend, a significant reversal of this long-term downtrend. In that sense, most recent longer term downtrend. Now I will look for retracement, a false hammer to go on the upside to have a bull play on the stock. Now this guy is a long candidate right now. Is above 200 days moving average. The MACD is on the same level. Better yet, if you make even new high, that's even better. Eventually, if it keep going, it's going to make new high on the MACD indicator on this guy. So now we'll wait for retracement, wait for false hammer, and I will go long on this guy. Okay. In that sense, yeah. So this is a long candidate, as I marked it right here. That might be a play coming up on this guy this month. MU. Yeah. Nothing. That's nothing on MU. Cisco. Clack. Oh, Clack making new high too. But you see the MACD? Very clear. There's no momentum in this. So it's not a long candidate yet. AMAC too. That was this guy. Right? You see a false hammer, but because of lack of a MACD indicator being around this level, is depressed on this level, went up and then came back down, and then eventually broke back up. So you see how the momentum is not really there, and then even this guy kind of a reversal bar, and then it gaps up. It's all over the place. This guy is all over the place in actuality. It's sideways, try to breaks up, try to breaks down. It doesn't know. It's just volatility widening on this guy, right? From here, you start. It broke. It kind of like I would say, oh, this is a false hammer, right? Do I go long? And then you went long, and then it broke down here, and then you went short. Or some people would, I don't know, right? And then this is how you get chopped up in trading actually, because the momentum is not there. So on the trend following, you also need to look for the momentum indicators where it's going to help you. And if you use option, yes, you have better probability of winning. But if you outright just long and short the stock, you will be all over the place and volatility expand, and you get whipped out, and you get stopped out in that sense in these cases. Alright, so trend following guy, you want the momentum too. Alright, first you want to uptrend, find uptrend, right? Making low, high, that's uptrend. Right? And then you want to see the momentum indicator is at least on the same level, not coming down like this. So this guy is all over the place. There's nothing I'm looking for at this point. Okay, so this morning I basically focused on first day of the month, focus on looking over, summarizing how the semis on my list are doing, and overall, the momentum's dying off in that sense, right? Right, very clear momentum dying off, and the only exception, a possible play was IBM. So this momentum is getting compressed, so I'm going to take it off as it's kind of my big watch list guy at this point, because it's going kind of sideways on this guy. IBM, right, the MACD is giving me a better indicator of possible going long. MU, nope. So I'm taking off a lot of guys that I use flat as a on the watch list potential play right now. So, and that's about that for this morning. I was planning to talk about a little bit more actually about the SOX trade yesterday, going over some of the significance, but I probably do another separate video on that when I have time to go over that summarized, more in-depth summary of the SOX trade, how was the play, the setup, and why was it, how did I actually take profit on it. So that's it for this morning. It's always interesting on the beginning of the month to look for plays and start laying down the groundwork in that sense. So semis, maybe tomorrow, the next times I will go a little bit more over the financials, see how they're doing. These are the two big sectors, the moving sectors of this year so far. So those are the where you have a lot more possible play when they are moving, right? Okay, that's it for this morning. Thank you for watching, and I see everybody on the next video.